The Netherlands just announced they'll keep taxing you for the next 5 years, even though you don't live there anymore. France is already doing it. Spain taxes you for 4 years if you move to a tax haven, and Norway made their exit tax retroactive, meaning people who already left are getting surprise tax bills. This is happening right now across Europe, and if you're not prepared, you could lose millions. Welcome back to the Mundo channel, where we help high net worth individuals protect their assets, secure multiple citizenships, and legally minimize taxes. Visit www.libertymundo.com and get in touch for personalized strategies. Let's talk about what's really happening here. European governments are fundamentally changing how they tax their citizens. It used to be simple. If you left the country, you stopped paying taxes there. Not anymore. The Netherlands just proposed a law that would tax Dutch citizens on their worldwide income and capital gains for 5 full years after they leave. Think about that. You could be living in Dubai, Singapore, or the Bahamas, and Amsterdam would still be demanding a piece of every euro you earn. France has already approved legislation that's even more aggressive. If you're French, and you move to a country where taxes are 50% lower than France's rates, they'll tax your global income indefinitely. Spain gives you 4 years of continued taxation if you dare to move to what they consider a tax haven. And here's the kicker. Their definition of tax haven keeps expanding. But nobody has gone as hard as Norway. They just implemented a 37.8% exit tax on unrealized gains. Let me explain what that means. Say you own shares in a company worth 10 million euros. You haven't sold them, they're just sitting there. The moment you leave Norway, they tax you as if you sold everything. That's nearly 4 million euros in taxes on money you haven't even received yet. They even added this insane provision where if you receive dividends from your company after leaving, 70% of those dividends go straight to paying your exit tax. The Nordic countries have been leading this charge. Denmark taxes your pension income for years after you leave. Sweden has exit taxes on investment holdings. Finland captures gains on shareholdings above certain thresholds. Germany's been doing this quietly for years. If you own more than 1% of a German corporation and you leave, they tax you on theoretical gains at fair market value. The Germans have been so successful with this that the Netherlands explicitly said they're copying the German model for their new 5-year tax. Portugal still taxes its own citizens who move to tax havens on their worldwide income. Even the UK is considering joining this party to stop the wealthy leaving with their assets. Imagine if every British citizen living abroad suddenly had to pay UK taxes. We're talking about millions of people, from retirees in Spain to entrepreneurs in Dubai. The economic impact of all this is massive. Entrepreneurs are fleeing Europe before they build wealth, not after. Why would you start a company in France knowing that if you ever want to leave, you'll pay exit taxes on gains you haven't even realized? Venture capitalists are reporting that European founders are harder to fund because the exit tax implications make eventual liquidity events less attractive. Young professionals are getting out before they accumulate assets. They're moving to Dubai, Singapore, or the US before they have enough wealth to trigger these exit taxes. Europe is literally driving away its most productive citizens during their peak earning years. Families are being separated because some members can't afford the exit tax to leave. Elderly parents can't join their children abroad without triggering massive tax bills on their lifetime savings. Entrepreneurs feel trapped in their home countries, unable to pursue international opportunities. So what can you actually do about this? First, timing is everything. If you're thinking about leaving Europe, every month you wait could cost you millions. Norway's retroactive changes are a warning. The rules can change overnight and apply to people who already left. Second, you need to restructure your assets before you leave. This might mean selling appreciated assets while you're still a resident, transferring assets to family members who are staying, or setting up structures that minimize exit tax exposure. But you need professional help with this. One mistake, and you could trigger the very taxes you're trying to avoid. Third, your destination matters more than ever. Some countries have tax treaties that limit exit taxes. Others offer citizenship or residency programs with favorable tax structures. The interaction between your home country's exit tax and your new country's tax system can make the difference between keeping your wealth and losing most of it. The trend is clear and it's not reversing. European governments face massive fiscal pressures, aging populations, climate change costs, infrastructure needs. They're not going to give up tax revenue from their wealthiest citizens without a fight. The technology to track and tax you globally already exists, and it's only getting better. The definition of tax residency itself is evolving. Soon it won't just be about where you physically spend your time. They'll look at your economic ties, family connections, digital presence. You could be living in Dubai full-time, but if you maintain business interests in Berlin, Germany might still claim you for tax purposes. The message from European governments is crystal clear. That education you received, those roads you drove on, that healthcare system you used, they create a lifelong debt that follows you wherever you go. They believe that the social contract doesn't end at the border. For Europeans who value financial freedom, the window is closing fast. The Dutch 5-year proposal, Norway's retroactive tightening, France's global taxation, these aren't the end. They're the beginning. Tomorrow's exit taxes will be worse than today's. Next year's rules will be more aggressive than this year's. If you want to reduce your taxes to single digits, make your assets impossible for anyone to touch, and gain more freedom with second citizenships, get in touch with Liberty Mundo and book a consultation call. We will help you develop a complete blueprint to organize your life to safeguard your wealth and your freedom. Follow the link in the description for more details. Thanks for watching, and see you in the next one.